I usually like to let everyone know the time we're having a session, but today this just came up and I wanted to share with the people that will have the time to see what I'm about to share with you all. So I'm just going to share my screen now and let's get right with it. So the first one is DXY. And the reason we're starting with DXY is because dollar is basically what controls the market. So if the dollar is bullish, that means the foreign currencies are bearish and risk on assets like gold, silver, stocks, cryptos, they're bearish. So it's basically inversely correlated. So what I mean by inversely correlated is just opposite. So if we're bullish on dollar, we're bearish on euro, US dollar, we're bearish on the stock market, on we're bearish on the crypto market as well. Now, in this case, now long-term perspective, I'm bearish on dollar, long-term perspective, but within the short-term perspective, I've been bullish and I've wanted to see dollar go higher until it hits inside this 3 months imbalance. So after you hit this 3 month imbalance, the next thing I wanted to see from here is a daily break of structure, right? And right here, this is our daily low and this is our daily high. Now, this is the most important thing I want to show you guys because if the dollar should drop off from this position to break this low, that is a significant break of structure and that's a mega trade. And if you look at this on the daily time frame, you can basically see that if we drop off from here, the only imbalance that could be used as support is right here. And after that, the next one is right here. And this is on the daily. These are the only two areas that I'll be anticipating for price to use as support. And if they fail, we're running this low. Now we go to the weekly time frame. On the weekly time frame, you can basically see that there is absolutely no imbalance right here that price can actually use as support. So that means if we drop and break this daily low, there's a very high probability that price will easily smash through these other lows, right? The next thing we'll do now, we'll go into the monthly. On the monthly time frame, you can see that on the monthly, we have this. I'll just remove everything on this screen for a minute. Now, on the monthly time frame, you can see that we have this candle right here. And this candle is going to close in the next 3 days or 4 days. Today is 27, if I'm not mistaken. So this candle should close in 3 or 4 days. And if it closes like this, that means there's potentially going to be an imbalance here. So that imbalance is going to be our last line of defense for support. And if it fails, and let's say we form that imbalance successfully and it fails to act as support, that means the only other area that that price can use as support would be right here. This would be the only other support area. Why am I showing you this? The reason I'm showing you this is because that daily break of structure can literally send us down here. What does that mean for risk on assets? That means that we could literally be resting in an incredible opportunity for risk on assets. What do I mean by risk on? I mean like stock markets, crypto markets. This is not financial advice. I'm not telling you to go and jump in and buy random cryptos or buy random meme coins. The reason I'm sharing this information is because of you spending your time here, you have that knowledge to at least be ahead of the curve, know what to be looking for. What you do with this information is to go on risk on assets. For example, you can go on Bitcoin, Ethereum. You can be looking for higher time frame break of structure to align. Because if you see a 4 hour, a daily break of structure on either Bitcoin, Ethereum, or any of these high caps like Solana and all the rest of them, if you see a daily break of structure, that could be giving you a signal that it's time to accumulate that asset, whatever asset that is. Now, that being said, let's go to Bitcoin. So I was on a call yesterday. Was it yesterday or so? It was Vote that we were on a call. We're talking about Bitcoin and Ethereum. And that yesterday, I was telling him about buy setup on Bitcoin and even Ethereum right here. Vote, true or false?
True, true, true. You said it.
Yeah, and we're talking about, and I told him the best thing you can do is just to buy Bitcoin right now. Wait, wait, this. And you can see what happened after that yesterday's call. Bitcoin literally went to the upside, edging closer to a 4-hour high. If we break through this 4-hour high and close above it, that is a significant break of structure. And the only thing I'll be looking for is key levels where price will be coming into. This will be my first draw on liquidity. I'll just mark them out. This will be my first draw on liquidity where price can use as resistance. If it fails, the next area would be right here. And if that fails, this will be the next area of resistance. And if this fails, then this might be another area of resistance. And this would be the last area of resistance. If it fails, then we're seeing a new all-time high on Bitcoin. Now, why do I mark these things out? The reason is because I'm trying to show you areas that price will face some level of resistance so that if you're on a buy setup, what you do is you're targeting those areas as an area of liquidity. So when price comes there, you're securing some profits. Price come here, you secure some profit. So that if we have a deep retracement after mitigating or tapping this position, what you do is you take some of that profit and you look for more buy positions so that if it continues higher, you're making even way more money, risking only your profits and not risking your own money. Because one challenge traders make is one problem a lot of traders have is they are always thinking of how to risk more of their money. Your job is get a capital, preserve the capital, get some profit, and work with the profits. Because when you're trading with the profits, let's say you made 5% profits and you're risking 1% of that profit. Even if you lost that 1% profit, it's not going to move you too much compared to when you're losing your own money. If you're losing your own money, it's literally gonna be challenging psychologically. That is why it's better to try to build a buffer, which is some profits, use that profits, put it on the market, and try to make even much more profits. So this is my analysis on Bitcoin, and we're watching here. You can mark this on your charts. You can mark this 4-hour high on your charts. Already, if you wanted to buy Bitcoin, you would have bought it with a 1-hour break of structure because when we came down here, and we tapped this weekly imbalance right here. And after tapping this weekly imbalance, all we want to see is a 1-hour break of structure. And right here, you can see very nicely, we broke a 1-hour high right here, and we closed above it, retested and rallied. So for some of you that were in my session, I think it was 2 weeks ago, I talked about this analysis and I said if I saw a break of structure down here, I was going to look for a buy on Bitcoin. So that is part of the reason why even if you miss any of my sessions, I would highly recommend you watch the replay. I always record every session and I always post the replay. The reason is because I know some of you have 9 to 5 jobs, family, kids, and stuff, engagements or school. So that is why I always record this session so you can always go through it. And any questions, just drop your question in the chat. I always reply all my questions as long as it's related to trading. So now, as you can see already, we have this 1-hour break of structure, retest, rally. The next thing we want to see is that 4-hour break. And after a 4-hour break and close, the next thing we want to see is a daily break. And this is the daily high. If this market breaks through this daily high, there's a very high chance we're going to see an all-time high on Bitcoin. So bear that in mind. So the next one I wanted to show you before we go into Forex again, the next one is Ethereum as well. So Ethereum, we're watching Ethereum nicely. I want to see a 4-hour break of this break of structure on Ethereum. Already, Ethereum has come to the upside, took liquidity, came down into an imbalance. So I'm watching to see if it's gonna expand higher, break and close above this level. If I can see a break and close above this level, yeah, that means I'm very, very high. There's a very high chance it will hit a new all-time high if it closes above here. So this is not financial advice, it's just my personal opinion. So now, what would I be anticipating to see on Ethereum? If Ethereum should rally to the upside, we already have this impulse move here, and this impulse move is already about 257%. So if we should see a rally on Ethereum, worst case scenario, let's say the low is in from here, I'll be expecting 128, around 128, and that would put us at around just around let's just call it 5,900 for one Ethereum. So that is if the low is in and we break that 4-hour high and close above it, this is the next area I want to see Ethereum draw into. So that's just my personal opinion, not financial advice. So the last but not the least is I don't know how many of you know what is an SMT divergence. Does anyone here know what is an SMT divergence? If you know what it is, yeah.
I, I know about divergence, but not the SMT.
All right, cool. So let me open my charts and we can talk about SMT divergence. So right here, this is now above here is DXY and below is USD card. So SMT divergence, to just explain it in a nutshell, very simple way, is when you have two pairs that are either directly correlated to each other or inversely correlated to each other, when you see that one is maybe creating a higher high and the other one is failing to create a higher high, or one has taken liquidity and the other one is failing to take liquidity and creating a lower high. It could also be inversely, like let's say, for example, one could be creating a lower low. Let me just draw this on the chart. So now, for example, let's say you're trading DXY and Euro, and you're seeing that DXY is created a low, then failed to create another lower low, and then created a high, right? And then you're looking at Euro because Euro is oppositely correlated to DXY. So what you're expecting to see on Euro would be something like this, right? That's what you would be expecting because we believe that because Euro is oppositely correlated to DXY, it's just going to do exactly the opposite. It's not really exactly the opposite. Now, when it comes to SMT divergence for Euro, if you're seeing something like creating a lower high, creating a low like this, then taking liquidity to now go lower, you can see that. Let me take this out. You can see that in this case, DXY did not take liquidity. It didn't take liquidity. It respected the low, the previous low. And in this case, Euro took liquidity before reversing. This one didn't take liquidity before reversing. This is SMT divergence between between DXY and Euro. Now you can still do the same thing with DXY and USD card. You can do it with, you can even do it with S&P 500 and NASDAQ because they move really closely together. But sometimes when you see things like this, where, for example, you're seeing that NASDAQ took liquidity from a previous high and dropped to break structure, and you're looking at S&P, and S&P created something like this. This is also SMT divergence between NASDAQ and the S&P. Now, what does this mean? This simply means that this one right here is the weaker pair. So if you wanted to look for a sell, which one do you think is going to drop more? This. Why? Because it doesn't even have the momentum to rally to the upside to take liquidity. And this one has enough momentum to rally, take liquidity before dropping. So this one is the weaker pair. So if you wanted one that would drop a lot more, this would be the one. But this is how you can use the SMT divergence in your own advantage. Now, how do you use it for what I'm talking about right now? Now, what I'm talking about right now is based on USD card against DXY. Now, if you look at USD card on the daily time frame and also look at DXY on the daily time frame, you can see that. Let me try and bring this down. So you can basically see that right here, DXY created a high, created a high, created a low, took liquidity from the previous high. You can see that right here. It took liquidity. I'll just zoom this in so you guys can see what I'm trying to show you very clearly. Let me zoom this one in as well. Now, can you notice that this one right here, we created a high, as well. These two, they move very similar to each other, not exactly the same. We created a high here, we created a high here as well. And then right here, this one rallied to the upside and it took liquidity from this previous high. It took liquidity from there and it went lower. And this one right here, it failed to take liquidity from this high and it went lower. This is what we call SMT divergence. This is already giving me signals that this one is the weaker pair. This is the weaker pair. Now, what does this mean? What this simply means is I will no longer be interested in looking for any short-term buys on USD card. Now, it doesn't mean that buys will not work. Buys can still work, but now I'm seeing that they are very low probability. And the reason I say they are very low probability is because this market is very weak. If you're looking for buys, there's a very high chance that buy could still run your stop because we have this low, we have this high. And if price breaks this low, that is a significant daily break of structure, confirming that we could literally continue to the downside because long term, I'm bearish on USD card on the long term perspective. Now, this doesn't mean that you should just jump into the market right now and start selling impulsively or aggressively. This is just me raising awareness because I've been taking short-term buys on USD card, which some of you know already. But right now, I'm not taking any short-term buys on it anymore. And I'm also not going to jump in and start selling unless I see significant break of structure, then I can start looking for sell opportunities. But if I don't, I'm just going to be on the sidelines. So that is one thing I just wanted to point out. So you guys that are also trading USD card as well, you'll be very mindful of that. So be very mindful of trading DXY. If you see DXY drop to the downside, breaking this structure, do not buy USD card anymore because it is absolute low probability and it can easily run your stop. Now, let's get back to the DXY to also show you something interesting on DXY. Now, you can see that DXY, after it rallied to the upside, took this liquidity. You can also see that it dropped to the downside and it broke 4-hour structure right here. So after breaking this 4-hour structure, the only thing I would like to see is a retest, a drop. But now it's tried to give us a retest. This imbalance didn't let it get to this low because this imbalance here. So for some of you that have been in my program, this is part of the things I teach as well. When you're anticipating for a retest and you see an imbalance before the area you want to take the trade, be mindful of that imbalance. It could also be an area of support or resistance that will reverse price and then you miss that trade. So this is another case scenario that happened. So the last line of defense for DXY is this imbalance that we have right here. If this fails to take us higher, then that means it's pretty much the end for DXY to just slump and head into this position. And if we break here, that is a significant daily break of structure. And I call that a mega trade. And all my focus will be on selling DXY, selling USD card, and buying risk on assets like crypto and crypto stocks and all the rest of them. So that's pretty much it. Unless any of you have any questions, if you have any questions, that would be the perfect time to ask your question. Even if it's not related to today's topic, you can ask your questions before we wrap up. Any questions?
Hello.
Yeah, Deacons, do you have any question?
I'm asking
Yeah, what do you say?
if you can touch on high resistance and low resistance.
High resistance and low resistance. Yeah, so what is high resistance liquidity and what is low resistance liquidity? Now, in a nutshell, the high resistance liquidity is an area where there's already an external run on liquidity or internal run on liquidity. So an example of a high resistance liquidity is you can see that right here, the market left liquidity here, and this is low resistance. And you can see how price went straight to the downside, took out those lows. And after taking those lows, if we take this to the lower time frame, like if we go to daily, you can see that price literally created a high, went straight down, took out these liquidities, and then rallied to the upside and broke structure. The moment it broke structure here, after taking liquidity, this entire zone becomes our high resistance liquidity zone. The reason it's a high resistance liquidity zone because it has taken liquidity, it has broken structure. These are the two important things. Whether you're using the high resistance liquidity on the lower time frame or higher time frame, the first thing you want to see is a run on liquidity, and the second thing you want to see is a break of structure towards the opposite direction. It took liquidity from the downside, broke structure towards the upside. The moment it broke this structure, you're using this area as your accumulation zone. And what does this mean? This simply means that when price comes into this position, you are looking for buys using an imbalance. An example, can you see how price came down here, tapped into this imbalance? That's your entry. You're using this imbalance. This is daily imbalance. You can now scale down to the lower time frame and look for time frame break of structure to take your trades. Let's take this to the lower time frame. So after this session, I'll look for the video where I explain this in much more detail, and I'll drop it in there, or I'll just send it to you. So I don't know if any other person has the same question, but if you do, I can just drop the video in the general chat. Now, you can see that, look at what price did, creating lower highs, created a lower low, lower high, and then it broke structure after it tapped into that imbalance. This is your entry. The moment you see this break of structure, you can use this high as your entry. You can use the imbalance here as your entry. It's up to you. For me personally, I personally just prefer using the high because sometimes if you use the imbalance, you could miss the trade. So I just use the high as my entry. And you can see that, what can you see that price did here? This is classic, another high resistance liquidity. Can you see that price came down here and it took liquidity from here? And after it took liquidity from here, it broke structure. This is also another high resistance on the lower time frame. I'm trying to show you what high resistance looks like, both on higher time frame and the lower time frame. This entire zone now is your high resistance liquidity zone. That is an area where you want to buy. And look at how price came to that position. Can you see how many times it came to the position and what happened? It rejected from that position. And this is an area you use as your stop loss. You use the high resistance liquidity as your stop loss, and then you use the low resistance liquidity as your take profit. Now, I'll explain low resistance liquidity as well. And low resistance liquidity is simply an area where there isn't any external or internal run on liquidity. An example is this. You can see that we created a low, rallied, came down here, created another low. This low failed to take liquidity from this previous low, creating more liquidity. Now, traders will look at this and call it double bottom, relative equal low. They could just call it lots of things, but this is classic low resistance. And that is why if someone was in a sell, they'll be targeting this low resistance. Now, bear in mind, if you're taking a sell and you're targeting the low resistance, target the closest end. Don't target the far end. Because I've seen so many times price will come, take the first one, and then reverse and run your stop, and then drop down to take the second one. So always remember, use the closest end as your take profit. That is where you want to exit. So I'll show you another example of low resistance. Now you can see this is another classic example of low resistance. Look at how price created a high, created a low, created another high. This high failed to take liquidity from this high and dropped lower. Here becomes a low resistance. So if you catch a buy from down here, you'll be targeting for price to run out that low resistance. Another classic high resistance, you can see how price created a low here, created a high, dropped down, took liquidity from here, and after taking liquidity, what do we see? It's rallied to the upside to break structure. The moment you see this break of structure, this entire zone becomes your high resistance liquidity. You can use this same concept for trading, investing, whether it's the stock market or the strategies I'm teaching you. You can use it to trade anything. You can use it to trade sugar, bean, synthetics, crypto, whatever that has a chart. You can use it to trade. I'm teaching you how to understand the algorithm. This is not trading with patterns. I'm not teaching you any pattern. I'm teaching you how to understand the algorithm, what controls it, how it moves, so you can take advantage of that. So you can see right here, after we took that liquidity from the low, we broke structure. Here becomes high resistance. Anytime you see price coming in here, you're looking for accumulation. You're looking for buys. And look what happened after we came down there. Buy, explosive price action. So I think someone has a question. Let me see. Question. Yeah, Nixon, what's your question? Before we get to your question, Dickens, do you understand what is high resistance and low resistance liquidity now?
Yeah, I've gotten a grasp of what you've taught. And I think I'll venture more into the video that you said you'll send so that I can understand them further.
Yes, I'll look into my archives because every single question you have, I literally have videos for them because I usually intentionally ask traders to tell me their problems so I can make all the videos because it makes it easy for you to learn. If you ask me a question, I'll just send you the video. So yeah, I'll send the video after this session. I'll just go through my archives and send that. Nixon, what's your question?
Mine it's not a question as per se. Like this break of structure, when you try to put the stop loss to the overall low, sometimes you find like maybe the stop loss seems to be so big.
Yeah.
Then maybe if you're trading a $200 account, when the price hit your stop loss, you find you go a lot of a loss. So the stop loss sometimes seems to be so big because we are waiting for a break of structure, of which the strategy work because it's something that I've been using for the longest time since I started watching your video. But the big problem that I have is as we wait for the break of structure, sometimes the price might come down to the stop loss and just hit your stop loss and then go to to my direction. So you find that when it hit my stop loss, get a huge loss.
Yeah.
I don't know if my question is.
Your question is well understood. So now, when it comes to your stop loss being big, right? What I do is when I look at a trade, I want to take a trade and I'm seeing that, for example, let's say I wanted to take this trade. And this is, if I put my stop loss on this trade, it would have been $983. That is too massive. There's no way I'm taking a trade with this level of stop loss. It's too huge. What you do is look for the imbalance within this range high, any imbalance that is within here to here. If you can see any imbalance within this range, mark that imbalance. Once you mark that imbalance, you can see that within this range low to range high, there's only one imbalance, which is amazing. Just one, not two, three, four, where you're now confused. Which one do I choose? Just one. Mark that one imbalance and wait inside there. Keep it simple. This is a daily imbalance. Once price taps this imbalance, count 3 time frames to the left. 1, 2, 3. Use 30 minutes break of structure and take your trade. Once you see a break of structure, and look right here. Price came down in here, created a high, created a low, broke structure, retested, this is where you get in. And if you even want to make your entry a lot more precise, now bear in mind, this could also come with, you might take 1 or 2 losses if you do what I'm just saying right now, but it will make your entry a lot more precise. What you can also do is, this could be your first entry. You could have a first entry here, right here, and your stop loss will be this low. Always add a few extra pips below. I usually add between 3 to 5 pips below. So if the low is here, I'll add a few extra pips below. Now, in this case, this is the first entry, right? What I would do if I want to get another smaller time frame entry is, once price comes in to retest, I'll stay on this time frame and wait for another this same time frame break of structure. Look right here, we created a high, we created a low, we broke structure. This break of structure, you can take another entry. Remember, if you're doing this, the next trade should be with a lower risk. If your first entry right here, let's say your first entry, the risk here is 0.5%. This second entry, you need to reduce the risk to like 0.3%. Right here, this is the low. Give it some room. Now, you can see that in this case, this might liquidate your position. This is why I said, bear in mind, you might take 1 or 2 losses if you do this, but the reward is incredible. Now, let's say, even though this one didn't take you out, but let's say your broker liquidated this position, you can see that price still give you another lower high, lower low, break of structure, give you another break of structure, still on the same time frame. This could now still be your entry again. If this second entry didn't work, this is how you can get in again. And you can see that this one has even way smaller stop loss than this one. And this one has way more smaller stop loss than the first entry. And your target, you can still be looking for the same target. You can go to maybe daily time frame, weekly time frame, 4-hour time frame. You can look for an imbalance. And right here, you can see right here, this is, you can target a 1:2 and then use the same area as take profit. First entry 1:2, second entry 1:3, and let's see how that plays out. Now, let's say you took 1 loss. You can see that hit take profit. Now, let's say you took 1 loss. This delivered 1:5. If you're risking 1% per trade, that's 5%. If you took 1 loss, 1% goes to that loss, and then you still have 4% profit. You're not looking for you're not looking for a strategy that is 100% because that doesn't exist. What you're looking for is a strategy that has a high win rate, so that even if you take a loss, 1 win, you're back to break even, you're still in profit. That is what you're looking for. I spent years trying to catch that one strategy that will be everlasting, no losses. That doesn't exist. You waste your entire life chasing things that are never possible. So, but what you focus on is finding a strategy that will work, that when you get in a trade, it has a high probability to go in your favor, and managing your risk. Even if you have the best strategy, if you don't know how to manage risk, you still blow your account. That is the reason why right now you can see what I said. First entry 0.5, second entry you can use 0.3. You're managing your risk, you're reducing the risk because you have multiple positions. So that way, even if one of them or 2 of them are losses, you're still losing between 0.8. It's not even up to 1% loss. And 1 win, just 1 win, you are back into break even and much even more profit. Is that making sense? Nixon, does that help?
Yeah, yes. But sometimes when you decide to be more precise, you find the market just leave you while trying to figure out where to enter. Because like mostly I normally use the 5 minutes entry, or let's say 15 minutes, but mostly 5 minutes. So you find sometimes maybe in 5 minutes you have like 2 to 3 FEGs. So when you're like, let me wait for the price to come down so that you can take it at a discount, you find the price just tap at the upper fair value gap and then it goes. Then sometimes you find the price come down after you've just entered using the upper fair value gap. So sometimes I'm always confused with that.
Now, from what you already said, the mistake you're making is you're using the lower time frame fair value gap. When you go to the lower time frame, let me take you to the 1 hour, for example. Now, on the lower time frame, you will see a lot of fair value gaps. There's a fair value gap here, there's a fair value gap down here, there's a fair value gap down here, there's another one down here, and down here. There are thousands. You're going to be confused. So your first job is identify the trend, wait for a break of structure to confirm that price wants to go towards your direction. Then, once you see the break of structure, if you want to look for a fair value gap, scale up to the higher time frame. So that way you will have one fair value gap to work with. You don't want to have 2, 3, 4, 5, 6 fair value gaps. It will be very confusing.
I think you got me wrong. I think you got me wrong. What I'm saying is this. Okay, I normally use the fair value gap starting from 4 hour, and then I line it to 1 hour, 30 minutes, then 15 minutes and 5 minutes just for entry. But normally, I use especially starting from 4 hour fair value gap. When I see there's a fair value gap of 4 hour, I go to 1 hour. When I see there's a fair value gap of 1 hour, I go to 30 minutes. Now, when I get both of them 4 to 30 minutes, I go straight to 15 minutes or 5 minutes, wait for BOS, then entry.
Yeah, perfect. Now, once you see that 15 minutes BOS and 5 minutes BOS, just use the high and enter like this. You see a BOS like this. Just use the high and enter. Stop trying to use the fair value gap, because I think that's what you said you do, right? Sometimes you see higher fair value gap on 5 minutes or 15 minutes, another lower fair value gap, and then you want to use maybe the one down here, and then price just uses the higher one on reverse. Is that what you mean?
Now the high, when I use the high entering the market, sometimes my stop loss becomes so big. So I have to wait at least for a retest.
Now, this is what you would do. Anytime you look at your stop loss and it's big, stay on that same time frame. I can promise you one thing. Stay on that same time frame. Once price comes back to retest, and then you see that if you enter from here and your stop loss here to be too large, stay on this same time frame. Wait for price to tap in and stay on that same time frame and wait to see that same time frame break of structure, the same time frame like this. Once you see that same time frame break like this, now you can use this high and enter, and your stop loss will be right here. I'll show you an example. This was an example on a trade on USD card. Now, when I wanted to get into that trade, the stop loss was big and I didn't really like it. So let's go to this price action. So the stop loss was big and I didn't really like that. So what I did was I just simply waited for same time frame break of structure. This was the trade right here. Now, I was waiting on the 5 minutes time frame because I wanted my stop loss to be at least not big, but just now right here, this was the low, this was the 5 minutes low. And then I'm looking at this, and this was over 30 pips. Now, I'm not saying that 30 pip stop loss is bad. It's just the fact that I'm getting in with 5 minutes. I don't expect to get in on 5 minutes time frame with 30 pips. If I'm going in with maybe 1 hour time frame and it's 30 pips, yes, I don't mind. But this is 32 pips already. And I'm like, there's no way I'm using 32 pips on a 5 minutes entry. All I did was wait on the same time frame, this same time frame. Don't go to any other time frame. Wait on this time frame. Once price breaks structure, wait for a retest. This is the retest. It came down, created a low, created a high, created another low, and then broke structure. This was the break of structure here. Now, I know this might look a little bit complicated for some of you that are relatively new. I just want to enlarge it so you can see it clearly. You can see this was the break of structure. This was the candle closure. This was the retest. This is your entry. Now, if you're doing this, always remember to add extra pips to the low, because this one, the stop loss now went from 32 pips to 5 pips. I had to add extra 5 pips to give it some room, because I don't want to use 5 pips stop loss. Even though if you use 5 pips stop loss on this trade, it would have been a banger. But your broker can easily liquidate this position when price came down here for a retest. It didn't take the low, but your broker can easily just wipe you out. Now, right there, beautiful entry. And now you can take your trade, and you can see that this delivered incredibly well. And it went from 32 pips to me even adding extra pips. So it's not, so my stop loss is not too small. And that delivered literally, if you held full volume, this is literally 1:5. Even though I didn't really hold it up to here, I just closed that 1:4. So always remember not to be greedy. Just take what the market has given you, 1:2, 1:3, 1:4, get out. Just try not to hold it too long unless it's a swing trade. I don't know, does it make sense, Nixon? Does this help?
Yeah.
Yeah, so we'll cover this. We'll cover this in the mentorship. We'll cover a lot of this in the mentorship, because I know a lot of you are struggling with this as well. And any questions, if any of you has any questions as well, feel free to ask. Now, another thing is that broker that I partnered with, they are giving you guys 100% bonus. So even if, let's say, you have $100 in your account, instead of you trading $100, you can now trade with 200. They will give you $100 extra. And the reason I like them is because, number one, their withdrawal is fast as well, and they have good spreads. And I know their regional manager, one-on-one, he's in the group as well. So if there's any questions, you can literally just ask him a question there, and he can just contact someone and they'll just help you get it sorted. It's not like some broker where if you need support, it's just going to take forever for you to get help. So this one is we'll have help in the group that will help you. So I don't usually do partnerships. The reason I don't really do it because I don't want to get into any company I don't really know so well, but this is people that I know so well, and I've been working with them since 2023. So that's part of why I'm recommending them. So, and you get 100% bonus as well. Now, Basi has a question. He said, assuming I use 4-hour time frame for entry, should I use same time frame fair value gap for exit? Yes, you can still use a 4-hour time frame fair value gap as your exit. You can use the same time frame as your exit. You can also go to daily time frame as your exit. Now, depending on whether that is a short-term trade or a long-term trade, you can have multiple exits. You can have exits using like the daily fair value gap, 4-hour fair value gap. You can also mark out 1-hour fair value gaps as well. Excuse me. So you can use that and scale out some profits. So, like example, you can say this is a 4-hour fair value gap. You can scale out some profits here, and you can also go to daily to see if there's any fair value gap. And you can see that on the daily, there's a fair value gap here. So you can literally use that area as your first take profit. So always try to, first thing is go to a higher time frame, mark the fair value gap before you go to the lower time frame. Because if you start from the lower time frame and go to the higher time frame, you could literally be waiting for the lower time frame fair value gap to get hit, not knowing that it has already hit the higher time frame and reverse on you and run your stop. So always go from higher time frame fair value gap. Now you go to the lower time frame. Go to weekly, monthly, then go to daily. Now go to week 4-hour. Example, you can see there's a fair value gap here. Now this fair value gap here, it was not tapped. But if you go to weekly, you can see that there's a fair value gap there on the weekly time frame. And that fair value gap is right here. And it was tapped. And the moment price tapped that fair value gap, it reversed immediately. It literally tapped the fair value gap and reversed and went straight to the upside. So that's why you need to first mark the imbalance from the higher time frame. So you're saying even if it's for an intraday trade. So even if you're taking a trade on intraday perspective, let's say you're taking a trade for using the 1 hour time frame, even if it's the 1 hour time frame you're using to get an entry, always go to the higher time frame to mark the imbalance because those are key levels that could act as resistance or support, could reverse the market to run your stop loss. That is why you need to be very mindful of those zones. Mark them out. Once you're in a trade, the next thing, exit. Where do I get out? Most traders think that the biggest challenge in trading is entry. It isn't. Entry is the easiest. Traders think that is the hardest part, but it is the easiest. The hardest part is exit. Because once you're in that trade and the trade is in profit, greed comes in. Your mind is telling you, let me hold it longer. It's going to keep going higher. Let's hold it longer. Now you don't have an exit plan. Sometimes you'll be on a trade, it's in a losing trade, going lower. You're looking at your money going down. Now you're like, oh, maybe I should close this trade. Maybe I should just close it right now. And you close it, the next thing it reverses on you and hits your take profits. Now you're regretting, had I known, I wish I had held this trade. So bear that in mind. The exit is the most important part. Once you are in, the exit is the next thing you need to figure out. From higher time frame to lower time frame, whether it's an intraday trade, swing trade. That makes sense. Does that answer your question? So, does any other person
Yes,
have
thank you,
any
sir.
other question? Any other question? No question. So, if you haven't,
Question.
yeah, ask a question.
I don't know if you normally trade US 30 because I've seen US 30 mostly it doesn't give a retest.
Yes, sometimes US 30 doesn't give a retest. So, it's part of why I do trade US 30, but I don't really trade it as often as I used to because sometimes it doesn't give a retest and it's just going to expand because it's a very volatile pair and it will just break structure and just go. So unless you want to be slightly aggressive, if you want to be slightly aggressive, what you can do with US 30 is once you see a break of structure and the candle closes above here, what you can do is you can just market execute, use the overall low as your stop loss. That's all you can do. For example, you can see that here. This is, let me just remove everything on this screen. Now, you can see that right here, price was trending to the downside, created a lower high, a lower low, and then it broke structure here. Now, this is the break of structure. So even though this one, it gave a retest though, because this was the break of structure, it gave a retest. So this one broke structure here and it gave a retest. Even though it was a very deep retest, but it did give a retest. But what you can do is the moment you see this candle close, you can just open market execution and your stop loss will be this few pips below this low. That's the only way I can recommend you do it. You know, it doesn't give a retest all the time, but it's still a good pair to trade. You can see here, it still came down, created a low, and it broke structure again right here, and it still gave a retest. So it doesn't do it all the time, but sometimes it still gives you a good retest. But if it doesn't, right here, the moment you see this candle close bullish, confirming that the structure has been broken, you can just open your market execution here. Stop loss, few pips below this low, and you're in the trade. Does that make sense, Nixon?
Yeah.
Awesome. Does anyone have any other questions before we wrap up? No questions. So if you're not yet in the mentorship group, I highly would recommend you join us because you don't know what you're missing out on. I can promise you, this is going to be life-changing for so many people in the program because what I'm doing is I'm literally using you guys' challenges for the mentorship. I'm not coming there to teach you random things that you're not interested in. I'm teaching you based on your challenges. We're diving into them and we're making sure that you understand them and you know how to trade independently. So a lot of people that have been in my program, like Vote, do you have anything to say? You've been in my program. Do you have anything to say?
Uh, for me, it has been a great challenge. Actually, I've been here before. I'm just at this point, it's just my psychology, and I'm becoming better and better. But my strategy, your strategy has been helped other people through me, and it has been beneficial. So the only thing you'll struggle with, which you'll work on with time, is just the psychology part. But everything is works as it is being taught.
Awesome. Yeah, and Vote was only trading 3 months before he came into my program. And the way he understands the market, and he's actually teaching people now. And some of the people he has taught are actually funded, which is amazing.
Great. Yeah.
And I don't know, did you also teach Nixon? Because I think he came through.
Yeah. That's why he knows about high resistance and whatever.
And Nixon is a funded trader, and this is his first time in my program. He was learning from Volts, who learned from me, and now he's funded. So that is to show you the impact the program can have in your trading. So if you are not with us yet, I highly would recommend you join us. So we're gonna have a session on Sunday, 5 p.m. That is gonna be our first session. And maybe I'll have another session on Saturday. I'm not 100% sure. I don't want to make a promise and fail. I always like to keep to my word, but I'll just see what my schedule is tomorrow. If I can make it on Saturday as well, we can have another chat like this on Saturday and go over what is happening. So, most especially if I do see a significant break of structure on Ethereum before Saturday. If it breaks and closes, yeah, definitely we'll have a session on Saturday. And then Sunday guaranteed. We're meeting Sunday 5 p.m. for our first mentorship session. So make sure you be there. There'll be recording as well, even if you're not going to be there. There'll be recording for the people in the group in the mentorship program. There'll be recorded sessions as well you can watch. And any questions, just give me a shout out immediately. Any questions you have, just text me and I'll be there to answer. If you enjoyed today's session, I just have a big ask. Just go into the public group. If you enjoyed it, you can just write whatever you enjoyed about the session, anything at all it is. If it's the analysis or whatever, just put it down in there. That is what encourages me to keep doing these sessions because I don't charge you any money for it and it's all for free. And if you enjoy it and you want me to keep doing it, just whatever you enjoyed about it, just say it out there. I appreciate you all. I appreciate you, Volte. I appreciate you, Onwana Basi, Dickens, Daniel, Nixon, Madwana, Luke, Chedley, Toby, Abuga. Abuga, is that Lubega? Because I think is that Lubega? Yes or no? I never.
No, no, no. No, it's a different
Oh no,
person.
or it's a different person. All right, cool. I appreciate you, Abuga Bradley, as well. And I'll see you all next time. Have a wonderful day, everyone. Take care.
Thank you.
All right, awesome.